not that many people in the UK pay capital gains tax, but when you do, it can be quite painful. Now, you'll know that the rate of tax is 10% to the extent the gain falls within the basic rate threshold, and is 20% if the gain exceeds the basic rate threshold. So basically, if you're an additional or a higher rate taxpayer, there's this 28% rate of tax that's payable for pretty much gains on residential property that is your main residence. So this resolution is about making sure you use your annual CGT exemption. Again, this is something you should think about at the beginning of the year, although of course you can make a disposal right near to the end of the year to use the exemption in a way that you can't necessarily generate income at the last minute. So last minute planning can work, but anything done last minute is probably not as good as it would be if you thought about it in advance and took your time over it. If nothing else, the market timing for making disposals, etc., to use your CGT exemption may be better with more time to make the decision. It almost inevitably would. So use your capital gains tax exemption. And remember, most importantly, that in this tax year, it has already fallen to £6,000. And next year, it will fall again to £3,000. So using that allowance, particularly at its higher level, it's lower than last year, but higher than it will be next year, it's absolutely essential. And if you need to dispose of investments to trigger a gain that will be tax-free within the CGT exemption, but you don't want to be out of that investment, then buy it back. But make sure if you buy it back, you wait 30 days, otherwise you won't achieve your tax planning purpose, or you buy back something similar, but not exactly the same. So make sure you use your CGT exemption. Think about transfer of assets between couples to maximize the use of the exemption. Transfers between spouses and civil partners will be free of capital gains tax, so that that person can also use their CGT exemption. Remember that parents, grandparents, anybody, for example, can transfer assets to their children or grandchildren. Think about CGT possibility, but if it's just cash, to make sure that the child or grandchild or the structure that's holding it for them can use the child's CGT exemption. And the anti-avoidance rules that you would normally expect to apply don't apply to parents or grandparents, or indeed anybody when you transfer assets to a child. Their CGT exemption is available for them to use, whoever gave them the money with which to use it in the first place. So take care, because of that reduced annual CGT exemption if you have ISA funding arrangements in place. So new tax year resolution 2, CGT planning, think about using that annual CGT exemption, because you cannot carry it forward if you don't use it. And thinking about it through the year rather than leaving it to the last minute will probably deliver you a better outcome.